What's going on, everyone? Michael Album here with Roofstock. And today I want to talk to everybody about things you should be thinking about for 2022 as you're gearing up for the year of investing. So first and foremost, I think it's important and prudent to talk about inflation. It's all over the news. We can't escape it, even if we stick our heads under the rocks. And it seems like it's here. And so what should we be doing as investors to combat, play a little defense, maybe even a little bit of offense to combat inflation? So one of the things that I know how to do that I think is a really great hedge against inflation is actually purchasing rental properties using debt. And so we've made some other videos about inflation. You can check out the podcast we did with Jason Hartman in the link below to learn a little bit more about what inflation is and how it affects you as an investor and what you can do to combat it. But just be thinking about that as we hear about inflation coming in larger numbers. Maybe it's more of a reason to purchase a rental property. And we get so many benefits from owning rental property, a hedge against inflation definitely being one of them. So think about that in the upcoming year in 2022. Another thing to be thinking about is the Fed has been talking about raising the interest rates. And we are seeing historically low rates right now. And so if you're able to lock in long-term debt, fixed debt for the next 15, 30 years, now might not be such a bad time to do it. And if rates go the other way, they continue to decline, we can just go ahead and refinance yet again. So think about restructuring some of your debt, especially if it's coming due. For those of you that are using commercial notes, commercial mortgages, those often have 5, 7, or 10-year fixed periods with a shorter amortization period. And so your mortgage payment tends to be bigger. So if you're having notes coming due in the next 12 to 24 months, might not be a bad idea to go refinance those and try to lock those in to either a 30-year fixed term or just resetting the term for another 5, 7, or 10 years because we know what the interest rates are today. So that's something that I'm currently doing right now. I'm taking some portfolio loan that I have with a 4-unit and a 7-unit. I'm splitting them up. I'm putting the 4-unit on a traditional conventional loan, 30-year fixed. I'm actually going to be putting the 7-year also on a 30-year fixed note because the interest is a little bit higher than what I'm paying now, but I can lock it in for the next 30 years. And so that makes me feel good at night. It helps me sleep. So that's a strategy that I'm utilizing. And there are 30-year fixed mortgages for commercial properties, which is not something that everyone is aware of. It's 30-year fixed with 30-year amortization. So it's a really nice product that I'm really happy to be taking advantage of. The last thing to be thinking about in terms of what's coming for 2022 is if you've got properties that are either performing really well and so they're worth a lot, or they're kind of a headache and you wouldn't mind seeing them go, think about selling off some properties. And this is something that I did earlier this year in 2021. I had a couple of headache properties. It was taking up a lot of my mental bandwidth. And I said, you know what? I've done the value add piece of it, not as much as I would have liked, but enough. Let me sell the property, 1031 exchange into something that's easier to manage, that'll likely cash flow better at the end of the day anyhow, and just free up some mental space to go off and do other things. And so that's what I did, and I'm so thankful that I did it. And you might be asking yourself, Michael, the market is so hot. You sold high. Didn't you have to go buy high? Kind of. Yeah, I did. But I still think it was a great deal that I got. And because I utilized a 1031 exchange, I had some extra dollars to go purchase something a little bit more expensive anyhow. So you might be selling off into a high market. Keep in mind that you might be buying into a high market. But just because your particular market that you're selling in is red hot or white hot might not necessarily mean that other markets throughout the country are seeing the exact same thing. And so I totally transitioned markets. I left Cincinnati with these 2 properties that I sold and went into a market in Tennessee. And so it was absolutely on fire, the new market, but not seemingly as on fire as Cincinnati. So I still think that I came out with a win. And again, I did this because I wanted to free up some mental bandwidth. And so a lot of people might be thinking, well, if I have this great performing property, why would I sell it? Well, that great performing property could be worth a heck of a lot more to someone that's willing to buy that cash flow from you. Just be thinking about that as 2022 comes around. If you do think that interest rates are going to go up, the prices of real estate tends to go down in those types of environments. And so if we are at an all-time historic low interest rate environment, prices are seemingly at an all-time high, could be a great time to take advantage of utilizing those high prices. So again, think about selling if that's on the table for you. So again, 3 things just to recap. Think about what inflation is going to do for you and how to take advantage of it in 2022. Secondly, think about locking in low-term, long, fixed debt. And thirdly, think about selling off some or all of the portfolio and maybe restructuring some things to be more streamlined as we're coming into 2022. So as always, feel free to leave us a comment or a review down in the comment section. We love hearing from you all, and we look forward to seeing you on the next one. Happy investing.